13th, 2022 edition of the Urban League Jobs Network Digital Career Success Series, brought to you by the National Urban League. I'm your host, Kenneth L. Johnson, president of the Harlem, New York-based diversity recruitment firm, East Coast Executives. If this is your first time joining us, welcome. The Digital Career Success Series, DCSS, is a professional development series that helps members of our Urban League Young Professional chapters and other diverse job seekers develop new skill sets that will enhance their careers through digital platforms such as webinars, Facebook, and Instagram Live. The goal is to provide an opportunity for professional development right from one's computer. Listen, today's DCSS is about conquering student loan debt, and it's featuring Katherine Welbeck. Amazing, amazing person, very knowledgeable. I've been on a couple calls with Kat, and I've been blown away by her knowledge of the subject. So I'm excited about this. All right, so I guess without any further ado, I'm going to introduce you guys to Katherine Welbeck. Katherine, welcome to the Digital Career Success Series.
Thanks so much, Ken. I'm so happy to be here. I really appreciate it.
Man, we are thrilled to have you. As I had mentioned during the intro, I just think you have a great wealth of knowledge about, what's happening out here in the space. Hold on, I'm looking here. Oh, you got a JD from Penn. I'm from Philly, so anytime I see you, I got to peek in, right? But listen, if you don't mind, tell the Digital Career Success Series audience about yourself, and then we'll kind of get moving.
Awesome. Thanks so much. And Ken, I just want to say thank you again to you and also the National Urban League and everyone involved in making today's event happen. I'm so happy to be here. For everyone here today, thank you so much for joining. Again, I'm Katherine Welbeck. I'm the Advocacy Director and Civil Rights Counsel at the Student Borrower Protection Center. So just by way of background, we're a national nonprofit organization solely focused on ending the student debt crisis. So we do a mix of litigation strategy, policy making, and advocacy to work on creating more protections for student loan borrowers, and also making sure when there are predatory abuses in this market that those companies are held accountable. So I'm really excited to talk to you all today and really talk about what to do with student debt.
Man, we're excited to have you again. I can tell the excitement is genuine because people are checking in from New York City, from Bowie, Maryland, from Atlanta, Georgia. So we're covering the gamut here today. All great places. Oh, by the way, I see the Atlanta in here. Listen, the State of Black America came out yesterday, I believe, from the National Urban League. Please visit the NUL website, download the report, and just gather that information in. But speaking of information, this is about student loans. We have the expert in the space on the Digital Career Success Series. So let's just get into it. Our audience is extremely educated, but let's talk to them at first about the types of student loans.
Awesome, let's jump right in. And so to jump into this, I like to start with talking about what type of student loans do you have, because it really helps determine what you need to do in terms of like taking action with your student loan debt. So broadly speaking, most people have federal student loans. So about 92% of people who have student loan debt have federal student loans. But there are also people who have private student loans. So whether those are people who have federal student loans and also got private student loans to help supplement some of the costs of school, or they're people who previously had federal student loans and then later decided to consolidate, to refinance their student loans into a private company. Those people also might have private student loans. So I'm just going to break down a little bit of a difference between what those two are and what they mean. And so we can kind of talk about what kind of things you need to do and what things you need to know in the current state of student debt. So again, I'm primarily going to break these down into federal debt and private debt. So federal student loans, there are two primary, I'm going to talk about a couple of different programs. So first, there is the federal direct student loan program. This one's pretty easy. If you have had federal student loans since 2010, those loans are now part of the direct student loan program. That program was created in 2010. And so that is a student loan program where the federal government directly lends to student loan borrowers to pay for school. There are also some other federal loan programs that are a little bit unique. So there's the FEL program. You're going to hear me say FEL a couple of times. It's FFEL, or the Federal Family Education Loan Program, to fully say it out. These are loans that are a little bit older loans. So they're loans that were made by private banks as part of a federal program. So they kind of have almost like this hybrid status, but they're considered federal loans, but they have some different kinds of rights and protections attached to them because they were made by private banks. That program ended in 2010, but for those of us with student debt, and if you know anything about student debt, just because the program ended in 2010 does not mean that you don't still have those loans, right? Because there are many people who are still in repayment on FEL loans. There are also Perkins loans, very similar to the Federal Family Education Loan Program, FEL loans, where these are a federal loan program, but these are loans directly lended by schools. So also kind of like a unique type of federal loan there. So we're going to talk a little bit about Perkins loans later too, when we talk about some different programs and different repayment options. And then also, there are private loans. So these are private loans, again, loans made by banks. So you might have a loan by Discover, Sallie Mae, or SoFi. Those are private loans. They're purely private. They're owned by banks. And we're going to talk a little bit about what that means and why that's different. So we're going to talk a little bit about that on the next slide. So the reason why this matters, whether you have federal loans or if you have private loans, is because it can affect many different things. So I'm going to go through these really quickly and then talk about what those mean. So it can affect your repayment plan options. It can affect whether you can qualify for different loan forgiveness programs. Again, as a federal student loan borrower, this is very important. I'm going to talk about that a little bit later too. Also, again, the type of payment relief you're eligible for. And then also default and collection practices are very different for federal and private student loans. So let's start at the top, your repayment plan option. So again, I was mentioning federal student loans. What's unique about the federal student loan program, and a lot of times we get questions about people like, what's the benefit to having federal student loans versus possibly, refinancing into a private student loan, or, what's the difference between my payment options on my federal student loan and my private student loan if people have both? Federal student loans, certain federal student loans, the vast majority of them, direct loans have certain rights and privileges with them under the law. So you're entitled to an income-driven repayment plan. You're entitled to different protections that exist under federal loans, whereas under private student loans, your repayment plan options are pretty much at the discretion of your private student lender versus these being rights under law for federal student loans. Also, whether you can qualify for loan forgiveness programs. So as we're talking about debt cancellation, as we're talking about new updates to the public service loan forgiveness program, there are certain pathways to student debt forgiveness that are built into federal programs. So whether, again, that's public service loan forgiveness, if you work in public service for 10 years, you can have your debt forgiven. Or if we talk about income-driven repayment forgiveness, there's a certain type of loan forgiveness attached to people who have income-driven repayment plans for 20 or 25 years. Or if we talk about, President Biden, picking up a pen and saying he's going to cancel debt, that's federal student loan debt. So having federal student loan debt means you can qualify for certain loan forgiveness programs. So that also is a really important distinction between federal and private student loans. Also, the type of payment relief that you're eligible for people who have certain types of federal loans. So if you have a direct loan, you have not been obligated to make student loan payments for the past 2 years. We could talk about people who might have been voluntarily paying, but during the CARES Act, so since March of 2020, direct loans have been part of the payment pause. And so being a part of the direct loan program also means that when you have federal student loans, you're eligible for different kinds of relief. And then also default and collection. And this is one thing that's a little bit different. Private student loans are treated like any other kind of private debt. So if you miss your payments or you go into default on a private student loan, it's kind of like a credit card. It'll go into collections, it'll ding your credit report. But because federal student loans are a debt owed to the government, there are different kind of consequences associated with default on a federal student loan. So that can include not only negative credit reporting, but it also can include treasury offset. So that means your tax refund can be seized. It means that the Department of Education can do administrative wage garnishment. So your wages can be garnished. So we're going to talk, so default with a federal student loan is pretty serious, but we're going to talk about actually some updates to the student loan system that might help some borrowers who might be in default. So this is kind of a little bit about, again, what student loans do you have? Why do these loan types matter? And I know this is a lot and I'm going through it pretty quickly, but definitely if you have questions on what I'm going through, like ask them in the chat. We'll get to those during the Q&A, but I at least want to start with this framing of, let's figure out what type of loans you have so we can figure out what type of programs are available to you. And so on the next slide, we're going to talk a little bit about current updates. As many of you, I hopefully have heard and know that the payment pause on federal student loans is currently through August 31st of 2022. So as many of you all know, since March of 2020, as part of the CARES Act, when Congress was responding to the pandemic, there were a lot of protections for student loan borrowers, and primarily that came in the form of the payment pause. And so what does that entail? So it means, as many people know, an automatic suspension of payments. Interest rates, interest on your federal student loans are at 0%, so no interest is accruing while these payments are suspended. And then also collection practices on these federal student loans have been paused. And then also what's really important, we're going to talk a little bit later about public service loan forgiveness, but for people who are currently trying to seek loan forgiveness through federal programs like public service loan forgiveness, these months in the payment pause count towards credit. So I know you may not have actually been, sending in your payment to the department, but for the purposes of those programs, these months count. So it's almost like a two-year credit for those programs, which is really amazing. And so, but we'll talk about that a little bit later. But right now, so again, the date is slated for August 31st, but we know over the past 2 years, this date has been extended. Is that going to happen? We don't know. This is something our organization is certainly advocating for, because we've pushed for a lot of changes in the student loan system before we send people back into repayment. But one thing that's important is that you'll continue to get updates about any dates that are changed. But for right now, the payment pause is extended through August 31st. Also, when the Department of Education announced the payment pause, they also mentioned in that announcement, when payments resume, they're also going to, borrowers who are currently in default on their federal student loans, and remember I mentioned earlier, there are a lot of negative side effects that come with default that can be really damaging to people's financial lives. The department is committed to moving people who are currently in default on their federal student loans into their regular repayment status when payments resume. So that's a really big deal for people who may have been struggling, who aren't able to make payments and ended up in default. That's a really big benefit. I don't have as much information. The department is still working out the details of what that looks like logistically, but again, as that information comes out, we'll be sure to share it. And then also,
hey, Kat,
yes.
no, I have a question for you. So this information is modular. It's moving, right? It's all like there's new information coming out consistently and constantly. Where does someone go? And this may be later on in your presentation, but I'd love for the team at the UL Jobs Network, DCSS, to be able to drop a link early into the chat. Where would you go to keep abreast of updates?
That's a really great question. So first, these announcements are always made through the federal student aid. So federalstudentaid.gov. So federal student aid at the Department of Education. So those announcements are made there. Also, what I can be sure to do is we have, and I can talk about some of these other resources, we have some specific pages on our website about some of these programs, specifically the PSLF waiver, and I can share that. It's forgivemystudent.org. But that is a really great question, Ken, and I know a lot of these things we send out, we blast via email, well, obviously we share with you all, but I will be sure to make note to also think of some other websites that might have this, so I can share that after today's program. I'm so glad that you asked that. That's a really great question.
Thank you.
And then also the public service loan forgiveness waiver. This is something very, this is really exciting. So the Department of Education, you all may have heard about this program, Public Service Loan Forgiveness. If you work in public service, so if you work for a 501c3 nonprofit, if you work for federal or local government, if you work, for example, in a school, whether you are a teacher or principal, the teaching assistant, a secretary, as long as you work in public service, if you work in legal aid, if you work in public service, if you work for 10 years, while you're in public service, while you're paying on your student loans, you can have access to forgiveness in 10 years. There are a couple other programmatic requirements that I'll talk about towards the end of the program. But previously, this program has notoriously had some hiccups and people actually being able to get their debt forgiven through it. But the Biden administration, as part of their commitment to saying, we're going to fix the broken student loan system, in October announced a year waiver to fix a lot of the issues, the administrative issues that were keeping people from being able to access student loan forgiveness through this program. And so there's a waiver from that extended from October 6th, 2021 through October 31st of this year that allows more people to have previously been ineligible for this program for some administrative issues to be able to access it. So this is a very, very big deal for people who work in public service. There are a lot of people who work in public service who have student debt. I raise my hand. But this is a really, really important program update that can help many people. So we're going to talk a lot about that a little bit at the end of this program. And so in the next slide, we're going to dive into some other things before we get there. But a couple of things to keep in mind while we're in the payment pause. One, make sure your contact information is updated. I know a lot of people moved during the pandemic, or people, depending on, which email you had on file at the department, but just if you, maybe switched off, so you had your work email, whatever it may be, if you've had any update to your contact information for the Department of Education, for your student loan servicer, please keep that up to date so that you're getting information about the payment pause and any updates that are coming directly from the Department of Education or directly from your student loan servicer. Again, this pause is currently extended through October 31st of this year. We don't know. I mean, we can still continue to advocate for that day to be pushed out further, but just letting you know for right now, it's set at October 31st, 2022. Also, for people who may have, had a payment due in March of 2020 before the COVID payment pause was announced, or we've heard stories about people who didn't realize that their payments were paused on their direct loans. So for certain loans, if people voluntarily made payments on loans that were part of the payment pause, so these are federal loans that are direct loans that are included in this program, you can get payments for refunds for those payments that were voluntarily made if your loan qualified for the payment pause. So just a note about that. And then also for people who are on income-driven repayment plans, I know we're used to recertifying our income every single year, but obviously payments have been paused for 2 years in this administrative forbearance. So just letting you know that those have been the deadline to recertify your income for IDR has been extended, so don't worry. So when payments are set to resume, you should be paying what your income-driven repayment plan was at that amount, and the department will start notifying people once that date is set out. But just a note, because I know we're 2 years from the last time people were really certifying their payment. But also we're going to talk a little bit about, say your income has changed during the pandemic. We're going to talk a little bit about also income-driven repayment plans for people who may not have been on an income-driven repayment plan, and talk about those type of programs too. So on the next slide, and I know this is a lot of information. So again, if you have questions, definitely ask them in the chat, ask them in the Q&A, and I'll try to get them. Okay, I'm sorry.
Yeah, definitely. And I know one of the questions was, is this a recorded workshop? And yes, this will be recorded, and people can locate this probably in the next few days on the Urban League Jobs Network YouTube channel. So you can find this and all other Digital Career Success Series episodes on the Urban League Jobs Network YouTube channel. So we're here today, Urban League Job Network Digital Career Success Series with Kat Welbeck, and I'm gonna drop it back to you.
Awesome. Thanks so much, Ken. And so I know I've talked a lot about federal loans, and I spent that time up top talking about, options for people with federal loans, and then talking about, federal loans and private loans. So what if you say you have a private loan? Are there any options available to you? Like I mentioned, again, federal student loans, you have access to income-driven repayment plans. There are certain rights and benefits that come specifically with federal student loans, but especially throughout the pandemic, and even like before the pandemic, we got questions from people who are just kind of like, hey, I might have a temporary drop in income, or I'm struggling a little bit right now. I'm moving. And so trying to figure out what to do about my student loans right now, but I have private student loans, right? Because with federal student loans, there are certain things that you can do, like, if you have a temporary drop in repayment, or you can temporarily access like a forbearance if you need like something like emergency for maybe like a month while you're trying to like, get on your feet, maybe after a move, or just some type of emergency financial situation. With private student loans, if you remember, I mentioned at the top, these things are not guaranteed by right, but it's generally about within what pretty much at the discretion of your student loan servicer in that private company. But one thing that we've told people to do, so for example, if you have a private student loan and you're kind of like, what, this month, I really don't know if I can figure out what to do with my private student loan payment. It is not guaranteed, but some things that we've told people to generally do if you're having trouble with your private student loan is, one, to reach out to your servicer directly, because sometimes they don't advertise it necessarily always on their websites. It's not a guarantee, but we have heard people having success if you kind of just need some sort of like brief reprieve, being able to reach out directly on your private student loans. And so then also a note also for people who have federal student loans, but are not covered by the payment pause. So people who have FFEL loans, you can reach out again to your servicer and see if you can get access to an income-driven repayment plan, which is covered as part of having a federal student loan. So that is an option. So even if you do have a payment, being able to make sure that is an affordable payment to you. And then again, for back to private student loans, other things that you can do is ask about alternative repayment options. So sometimes, and that's a range of things. So a lot of times, you might call and say, hey, to my private student loan servicer, I don't think I can make my payment this month. Are there any options? Again, it varies on what they might say or what they might do, because it's up to their discretion. But just asking sometimes you're able to get more of a success than not asking at all. And so some different things that we've seen, some people have said, for a temporary time, the private servicer might give them interest only payment. So that might like lower the payment amount for a month. A slight economic hardship forbearance. So there might be like maybe not a payment for a month, or some sort of like temporary payment relief that in the form of one of those things. But one thing we will note to do is just like ask them how it's being reported. So making sure they're saying like, no, you don't have to make it this month, but you don't want it to be reported as a non-payment. So being sure you ask those kind of questions. And then a really, really important thing is always to document if you ask, because again, it's up to their discretion, but always ask why, right? Because sometimes the pushback helps get you another answer, but also sometimes it helps just create a record of, why they might not deny it. And then also making sure that, are they offering these type of things equitably? So just making sure that these are things that you want to do. Alrighty. And so on the next slide, this is a lot. And
hey, Kat, while we're transitioning, there's a question that I think probably this might be a good time to answer it. Can you enroll in public service loan forgiveness and income-driven loan repayment simultaneously?
Oh, this is such a great question. And Chantal, I'm glad you asked it. And actually the interesting thing is, you actually should be enrolled in both at the same time. So I'm going to talk a little bit about this waiver program, but typically outside of this 1-year waiver period, in order to be able to access public service loan forgiveness, you have to be in an income-driven repayment plan, and you have to do certain things to like let the department know that you want to be in public service loan forgiveness. So you have to kind of like fill out a form that says you work in public service, and we'll talk about that. But you actually should be doing both. So I'm really glad that you asked that. And we'll talk about for people who like previously have, maybe been trying to be on track for public service loan forgiveness, but weren't enrolled in IDR. income-driven repayment, we'll talk about things that you can do. But that's a really great question because you should actually be in both. So one, having access to a more affordable repayment month to month, but then also having access to loan forgiveness after 10 years. I'm really glad you asked that question. All right. Oh, these are really great questions. Also, I see coming up about the waiver, and we're going to get to that, I think, in 1 or 2 slides. So these are really great questions. Okay. And so a little bit of background. I know I've said, and apologies for talking in acronyms. I've talked a bit about IDR. It's short for income-driven repayment. And so again, I mentioned people with federal loans have access to income-driven repayment plans. Income-driven repayment plans are really, really important because they set your monthly payment based on a calculation of what your discretionary income is. And so depending on which plan you're in, it's generally 10 to 15% of the Department of Education, like a federal calculation of what is like your discretionary income. But one thing that's really, really important about IDR, there are a couple things. One, again, because it's based on your income, at certain income levels, you can have like as low as a $0 payment, right? So there are some people who can qualify for $0 payments based on their income. So it's always really important, you know, if you see your student loan and you're not enrolled in IDR, you're like, this is really unaffordable, make sure that you're enrolled in an income-driven repayment plan because it can make your payment much, much more affordable. Also, if you experience like a temporary change in employment, so I know this is like, right now we're in a payment pause, and so many people are not making payments on their federal student loans, but this is for like just for future reference as you know we re-enter our world of repayment. It's really important to know because if you ever have an unsudden or unexpected drop in income, you can recertify your employment so the Department of Education knows that your income has changed so you can have a lower IDR payment. So it's always really important you know, to make sure that if you have access to an income-driven repayment plan. Also, one thing that's really important, so I was talking about at the top, federal loans have access to different loan forgiveness programs. One of those is income-driven repayment. Again, this program historically has not lived up to the promise of forgiving the debt that it should be. The Department of Education is, we believe, is working on this now, but as one of the larger fixes to, you know, the student loan system. But the idea is if you are enrolled in an income-driven repayment plan and you make payments every month, including, and again, zero, if the Department of Education tells you your payment is zero based on your income-driven repayment plan, that is still a payment. So I'm just making note of that. But if you make those payments for 20 or 25 years, depending on which IDR plan you're in, you can have access to debt forgiveness. So that's a really important thing to note. That's another pathway to debt forgiveness after 20 or 25 years. And then also, again, really important question that was just asked about PSLF and income-driven repayment plan. When you're trying to apply for PSLF and in that program, you should be enrolled in an income-driven repayment plan. So again, if you're in PSLF and you're enrolled in IDR, you should be doing both. There is access to debt forgiveness after 10 years. And so also just a really quick note here, I'm calling it IDR, income-driven repayment, but there are many names for these programs. So you might be in an income contingent repayment plan, ICR, income-based repayment plan, IBR, pay-as-you-earn, PAYE, or revised pay-as-you-earn, REPAYE. So they come in different names and different forms, but they are all types of income-driven repayment. And so again, for the purposes of PSLF, which we'll briefly talk about next, for the purposes of PSLF, those are all different types of eligible public service loan programs. Okay. The limited public service loan forgiveness waiver. This is really, really important, and I cannot stress this enough. I'm going to say this out of order. I'm just going to say the date first, October 31st, 2022. Write it down, highlight it, circle it. This is really, really important because we are actually seeing people who have previously had trouble accessing debt relief through this program get their debt forgiven. And so we want as many people who know this as possible. So for example, I'm going to talk a little bit about public service. If you work in public service, if you know somebody who works in public service, if you work, like, you know, tell your coworkers, tell your family, tell your friends, tell everyone you know, because we really want as many people to be able to access this program as possible. And for this year, the Department of Education has changed this program. So I'm going to briefly explain to you what the program requirements generally are and why this 1-year waiver is really important. Okay, so generally to be able to access public service loan forgiveness. So again, this is a program where if you work in public service for 10 years, you can have your loans forgiven. But there's certain requirements within that in order for the Department of Education to deem you eligible. Generally, any other time other than this 1-year waiver, you have to have a direct loan. Okay, and I know we talked about there are other federal loans. So this is a federal program, but you're like, hey, what if I have a FEL loan or a Perkins loan? I'm still a federal student loan borrower. Historically, it was only direct loans. So direct loans, being enrolled in an income-driven repayment plan, which is really important. So again, back to that question, you had to have a direct loan, be enrolled in an income-driven repayment plan. You have to work in public service full-time, but I'm also going to talk about what full-time means. Full-time for the purposes of the Department of Education is one of a couple of things. It can be 30 hours, you have to at least work 30 hours a week. So say you work 40 hours a week in your public service job, that is full-time. Say you work 15 hours part-time for one public service job and 15 hours part-time for another public service employer, you can add those together and that equals 30 hours, right? So 30 hours a week for a qualifying public service employer. And then you have to make 120 payments. So it means you also have to pay your student loans for those 10 years of service. 120 payments is 10 years. But again, if you remember, I noted earlier, if you've been on the payment pause since March of 2020, those payments still count. So even though you have not physically submitted a payment to the Department of Education, this is the one exception of like, if you didn't make that payment to the Department of Education for the purposes of this COVID forbearance, that still counts. Okay, so those are typically the rules of the program. What this waiver changes, it changes these two requirements that are in the red box up here. So if you don't have a direct loan, so if you're a federal student loan borrower and you have FEL loans, so again, those older loans that were made by, that were part of a federal loan program, but the loan was made by a private bank, or if you have a Perkins loan, for example. So it's a loan, a federal loan program, but the money was directly loaned to you by your school. Now you can have access to PSLF. Historically, people who had FEL loans and Perkins loans, in order to access PSLF, had to consolidate their loans, which is kind of like a refinance with the federal government. So they had to make a new loan, a direct loan, to be able to access PSLF. The problem was, before this waiver period, people who had FEL loans and Perkins loans, when they consolidated to get a direct loan to be able to access public service loan forgiveness, they lost all the credit they previously had. So I'm going to use the example of someone. So say someone works in a school. So again, it could be anyone in a school. Like, so you are a teacher, you are the school nurse, you are the school secretary, you are a teacher, a teaching aide at the school. So say you previously had a FEL loan. So you worked in a school, so you had a qualifying public service employer, you worked 30 hours a week. But the problem was you had an older loan. So say you had a FEL loan or a Perkins loan, but you'd worked in that school for 5 years and then you found out about PSLF. Previously, you would have, when you consolidated your direct loan, you would have lost all 5 years of those credit that you previously worked for your qualifying employer. But now with this waiver, you can consolidate. If you have a FEL loan or a Perkins loan, you can consolidate into a direct loan and still get credit for the period of time where you had a FEL or Perkins loan, but it's only for this year. So it's really, really important. This is really important for people, especially who have FEL loan and Perkins loans. If you work in public service, to be able to enter this program now to still get credit for the previous time period that you worked in public service. Also, people who previously may not have been enrolled in an income-driven repayment plan. Some people may have been on a standard repayment plan. They may have been on a graduated repayment plan, whatever it was. But there are also people who are locked out of PSLF before because they were on the wrong type of repayment plan. It is okay. Now you can get credit for those times if you, again, certify your employment. And then, okay, so that's kind of a little bit of background, the things that changed about this program. One thing I'll go through quickly. So again, this waiver is especially for people who have felon Perkins loans. If you consolidate now or already have previously, you can get credit for your previous payments on your felon Perkins loans, which is really, really important for getting you to that 120 payment count. Again, any payment plan counts for right now for this waiver plan if you're paying on your student loans. If you weren't in an IDR plan, so we got a question, someone's like, should I be in IDR? Yes, but for this waiver period, you can still get credit for the periods where you were not enrolled in an income-driven repayment plan. Things that don't change. You have to be enrolled, you have to work for a public service employer. That still applies. And then also one thing for people in the military, your military periods of deferment and forbearance, those count too. So previously that didn't count, but if you're a military deferment and forbearance, those periods count. And then also current employment is not necessary. And what that means, previously when you had PSLF, you had to apply for PSLF while you were currently employed by a public service, like a qualifying employer. But right now for this waiver period, say you're listening to this program today and you're like, oh, wow, I worked for a legal services organization as a paralegal for 15 years and I just retired. Guess what? And I still have student loans. You can still get credit for this program, right? So the idea is that people who previously would have been eligible for this program can still access it. So say you've retired or you worked in public service for 10 years, but now you work in the private sector. For this waiver period, you can still get credit for payments. And then on the next slide, I know this is a lot of information. I'm going through it quickly, but I also know. Oh, yeah.
Yeah, I'm glad you just answered that question because that was actually in the chat.
Oh, great.
So that was amazing. Also, a question that kind of relates to that. Someone was wondering if they start their own nonprofit, can they use that experience as well?
Yeah, so like, and I'll go back to it again. It's about the organization's tax status, right? So like, if your organization is a 501c3, like public service, like nonprofit, it doesn't matter if you're the executive director, it doesn't matter if you're the secretary, it doesn't matter if you are the lawyer at the org, if you're like, whatever your job title is within that organization does not matter. It's more so about the organization and is it a qualifying employer. There's some more steps to like verifying your employment with the Department of Education, but it doesn't matter that like it is your nonprofit and you're like the CEO or the president of that nonprofit. It's more so about, is this a qualifying like service organization is the distinction. Also, one thing that is not here that I will note is also for public service since 2007. And the reason why you're like, why 2007? That's when the program started. So like, if you're like, wait, what about my public service from like 2002? That is wonderful. I'm glad you did it, but the program started in 2007. So the department will give you credit for 2007 onward. So I also want to just make that note really quickly before we go to the next slide with a couple other notes in here on this waiver. Again, so really, really important things. This waiver is not automatic. After today's program, we're going to share links to resources about this program that can walk you through this process. I can talk to you more about like finding out resources about it, but so I know I'm going through this quickly and there are a lot of like details about like how to actually go through the process of like verifying these steps with the Department of Education. And I want to let you know that will be shared because there's some couple steps. So I just kind of want to give an overview of those steps. The waiver is not completely automatic. So there are a couple, especially certain people who want to take action during this period. If you have a FEL or Perkins loan, you need to consolidate into a direct loan if you think you qualify for this program. So like, if you're like, I know for a fact, like I work for the federal government, right? I know I work for a qualifying employer. I work for my city government. I work for a qualifying employer and I have a FEL loan or a Perkins loan, you're going to consolidate that into a direct loan in order to get access to this program. There are a couple other steps, but letting you know, those are people who want to take action. Other people who want to take action, it says file an ECF, and you're like, what is that acronym? An ECF is an employment certification form it's now known as a public service loan forgiveness form, a PSLF form, but it's essentially the form that says you raised your hand to the Department of Education and told them that you wanted to take advantage of PSLF. So this is really important for people who are maybe finding out today that they can take advantage of this waiver, people who are like, wait, I work for my local fire department. Hold on, like I qualify for PSLF. This is for people who, if you have either previously not certified your employment, you've worked for like the local public defender's office for the past 5 years. You're like, wait, I've never told the Department of Education. This is for people who have never filled out. So if you've never told the Department of Education that you want to have access to public service loan forgiveness, make sure that you fill out a public service loan forgiveness form at the Department of Education. On the federal student aid website that I mentioned earlier, there is a PSLF help tool, and it will walk you through this process. We're also going to share a website that our organization has that can walk you through this process. But again, so two things that are not automatic. If you've never told the Department of Education that you work in public service and you want access to PSLF, fill out an employment certification form / a public service loan forgiveness form. They're the same thing. They just have gone by different names. And then if you have these older loans, a FFEL loan or a Perkins loan, you're going to want to consolidate into a direct loan with the federal government to be able to access this. Again, we have information on this on our website, forgivemystudentdebt.org, that was dropped in the chat, but also a lot of this information, all this information is also on the federal student aid website, and that's where you'll find the PSLF help tool. And again, I just can't reiterate enough, people who have FFEL and Perkins loans are probably like at the greatest risk of missing out. So really, really want to make sure that you take advantage of this. And then this last slide just has the same details, just really, really important takeaways from this. And I think we're getting close to time, so I'm so sorry, Ken. We can jump into the rest of Q&A, but again, for any month when your loan was in repayment, you can get credit if you meet these waiver criteria. So this is why this is really important. People who previously told they had the wrong loan type, FFEL and Perkins loan, people who previously were told that they couldn't get access to this program, who work in public service, are now getting access to this program. The deadline is October 31st. Like literally, if I could just like wear a sign that said October 31st, 2022, I would like just know that deadline is very, very important. And please, please, please don't delay. One thing I will note for people who are going through this process, it does take time. The Department of Education is getting a lot of applications. So also note, it is not strange if it takes you like a month to hear back, but just make sure you fill out the process, document everything, keep copies of everything for your record. Again, things to do: confirm your employer. Make sure if you work in public service that you let people know that you work in public service. These are really great questions. I'm sorry, I saw one pop in as we're going through a great question. Do the payments have to be consecutive? No. So for example, if you worked 5 years for your city government. So I saw people were from all over. I grew up in Atlanta. So say like you work for Fulton County, right? That you work for the county government. You worked there for 5 years. And then you said, you know what? I'm going to go into the public sector, and you decided to work for Coca-Cola for 2 years. And then you said, no, that's cool, but I really, really miss I really miss working in public service. And so then you decided to go work for a nonprofit, and you worked at a nonprofit for like 5 more years. You can add together those first 5 years at the county, the 5 years at a nonprofit, even if you had private sector work in between. That still counts. That's a really great question. Confirm your loan types. Again, if you have a FFEL or Perkins loan, please, 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 please make sure you take advantage of this program. And then also, so if you need to consolidate, again, if you have a FFEL or Perkins loan, submit your PSLF form to let the Department of Education know you want to access public service loan forgiveness. And then if you experience any issues, make sure that the Consumer Financial Protection Bureau, file a complaint with them. If you have any issues, the federal student aid at the Department of Education has a student loan ombuds person. You can reach out to their office to get help with these issues, but please just make sure that you're taking advantage of this during this time. And I will stop, Ken. I know that was a lot at once, so I'll stop talking.
Simply amazing. I want you to know that was amazing. I honestly looked at the slides prior to this and said, I'm not sure she's going to make it through, but you made it through, so congratulations. But you did such a great job that it brought a bunch of questions to the forefront. So that's a good thing, and that's what we want. So we're going to jump into the Q&A right now, but also, as you can see, the crack staff at the Urban League has a URL for protectborrowers.org that you can go to get additional information. Also, all of the information that Kat shared will be available on the recording. But let's jump into some of these questions. This is kind of speed dating for us right now. We're gonna go through these as soon as possible. So, was there a similar relief program when the Family Federal education loan ended in 2010?
And this is I'm not sure which relief program you mean, but so pretty much it's just the programs changed. So the Department of Education switched just to the direct loan program to originate their student loans. So like now federal loans are just direct loans from the Department of Education to student loan borrowers. But again, if you have a FFEL loan, that's why, and I don't know if you work in public service, but that's why this program is so important, because again, the FFEL program may have ended in 2010, but there are a lot of people who still have FFEL loans. So really one thing we try to do is talk about ways that people who still have FFEL loans can benefit from existing federal loan relief programs. And so again, the Public Service Loan Forgiveness Program started in 2007. So it existed when the FFEL program ended, but previously people who had FFEL loans would have lost all of their previous payment progress towards loan forgiveness. Because if you remember, I mentioned that there is a program called income driven repayment. And through the IDR program, there's also access to forgiveness if you've paid for 20 or 25 years. So previously, before this waiver, people who had FFEL loans kind of had a bind. They said, if I work in public service, I can consolidate my loan into a direct loan and try to access PSLF, but then I have to like lose all my previous credit and work 10 years towards public service loan forgiveness. Or some people made the calculation, well, I have this FFEL loan in 20 or 25 years, depending on my payment plan, I can get access to loan forgiveness through income driven repayment plan. So do I want to lose my previous progress towards repayment to enter in this new relief program, or do I keep chugging along? And so it was a hard decision to make for a lot of people. So this waiver fixes that issue for FFEL borrowers who are in public service loan forgiveness. But what I will say is, I know there are a lot of programs that the department is fixing. So I can't speak to like what other programs may exist, but I at least know for people who have FFEL loans and work in public service, this waiver really does help provide relief where like there was a little bit more of a bind before this waiver existed in terms of consolidating into a direct loan.
All right, excellent. So Naomi checked in and she wants to know, what if your student loans are FFEL loans by private owned banks? Are you eligible for the PSLF waiver?
Yes, this waiver is for you. Like you are one of the main people. So when I kept saying, if you're a person who may need to consolidate, you are one of the groups of people this waiver is for. The idea is to say, you have this federal loan. There's this kind of like distinction that we make for this. But previously, again, where you would have lost credit for public service loan forgiveness, you would have lost credit for your payments towards loan forgiveness with consolidating your loans, like you start over. With the waiver, if you have FFEL loans and you've worked in public service, now when you consolidate into a direct loan under this waiver, you can still get credit for the payments that you made under the FFEL loan. One thing I'll say to anyone doing the waiver process though is like, as you go through this, because we've heard about certain servicers leaving the market, just make sure that you download your history, your payment history, so you have that information. But yes, this waiver is intended to benefit, for example, FFEL borrowers who previously could not access public service loan forgiveness without losing payment credit under their FFEL loan. So that is a great question.
Got it. I'm going to shorten some of these. If you're working part-time for a nonprofit, are you eligible? And if you meet all the other criteria, but it's just that you work part-time, are you eligible for student loan forgiveness?
This is what's really important though, is how the Department of Education counts part-time. So two questions. So two things. Again, part-time is 30 hours or more. So like some people, your nonprofit might say full-time is 40 hours, but you work 30. For the purposes of the Department of Education, that your 30 still qualifies. So there's that one distinction. So like, say you are not full-time for the purposes of like how they designate it, you are still working 30 hours. But say you're like, I actually don't work the 30-hour threshold. So say you're working 20 hours a week. Unfortunately, it has to be full-time. It has to be 30 hours full-time employment for the purposes of the Department of Education. But one thing I will note is that if you work multiple part-time jobs and that adds up to 30 hours, so say you work at two nonprofits and together those hours are 30 hours or more, that will qualify towards public service loan forgiveness.
Gotcha. During the waiver, does working as a contractor for the government count?
This is a really great question. And unfortunately, no. So like I generally answer is no, unless you're contracting services like a 501c3 nonprofit. But generally what we find, like, if you're like a contractor with like a private firm that contracts with the federal government, that is different. So what we kind of like always guide people to, it's more so like, what does your W-2 say? Who is your employer on your W-2? So if your employer is, I'm just gonna pick a federal agency. So if your employer is, the Treasury. So say like Treasury is your employer on your, or the Department of Justice is your employer on your W-2, like that is you're a federal employer. But say you work for a private consulting firm that contracts with the federal government, your employer is the actual contractor. So again, it's about who your employer is, like, so who's writing your check, who's filling out your W-2.
Got it. Yeah, this is interesting in itself. If your loans have been split between borrowers, can you still consolidate for the fill loans into a direct?
Yes. So, and this is also really confusing, right? Because again, I mentioned a second ago to this question, there are a lot of people, like, so we know that certain services are leaving the market and it's really confusing. So people are being transferred to different servicers. Before I answer the question, the first thing I'll say is, if your servicer is one of the servicers that's, if you like you're undergoing a servicer change, or if you get a notice that's saying your service is going to change, download your payment history, make sure you have all your paperwork in line, because there is a history of things being lost when servicing is transferred. So you want to make sure that you have all of your documentation in line during the transfer. And then two, again, that's the benefit of this program. So for example, if you say like, wait, I just found out about this public service loan forgiveness program, I'm not in PSLF and I have a FEL loan, even though you might have a different servicer, you can still consolidate those loans. What's interesting is, and again, I know I went through this really quickly, but when you go through the Department of Education's PSLF help tool consolidation, we also have some information about this on our page, forgivemystudentdebt.org. When you consolidate you go to the federal student aid website, and it will actually show you all of your federal loans. So say, you have your federal loans, they haven't fully been sent over, or you maybe have two different servicers for your federal student loans. They're all your federal student loans are going to be on that federal student aid page. So you can actually pick the loans. So they'll all be together, even if they're serviced by different people, as long as they're federal student loans. So yeah, that can be really confusing when like you might have like different servicers, but they should all still be on federal student aid when you go through the consolidation process.
All right, final question here. If you were on forbearance, does that qualify for timely payments?
Great question. And it depends. So, and also, do you mind, Ken, if I answer one? I know we might not have time.
Go ahead. We're good. We'll fit it in.
Okay. So I'm going to answer the question about SoFi too. But before we get there, but if you're in forbearance, it depends. So the the general answer is forbearance does not count for PSLF purposes, but with a very, very big but exception, right? A very big exception. Again, one of the first things I said during this webinar, if the forbearance was because of the CARES Act, so this 2 years where most federal student loan borrowers have not been making payments, that counts. That is the Department of Education's that is like the administrative forbearance, like from the CARES Act. That counts because that is like the government saying we are pausing loans for this federal program, right? That counts. So very, very big caveat. The payment pause counts. I say it a lot because we get this question all the time, and I don't want people to think like the payment pause counts. You don't need to do anything like if your payments are currently paused because of the COVID forbearance. Those count. The other one that counts, military deferment and forbearance, that counts for the purpose of PSLF. So those are two very, very big exceptions. But otherwise, if it's kind of like, hey, I put my loans into forbearance for 2 months just while I was kind of like, getting on my feet after a move, or like I kind of had an emergency medical expense, so I put my loans into forbearance for a couple of months while I was recovering, those do not count. But again, the COVID forbearance counts, military deferment and forbearance counts. Sorry.
Gotcha. Let's jump to the SoFi question real quick.
Yeah. So if you consolidate your loans with, for example, SoFi, a private lender, so SoFi or like, Discover, you consolidate with a private bank, that would make you ineligible for public service loan forgiveness. So these loan forgiveness programs are for federal student loans. So again, when we're talking about, calling on broad-based cancellation, we're talking about IDR, income-driven repayment plan forgiveness, we're talking about public service loan forgiveness. Those are federal programs, so they only qualify for federal loans. So if you consolidate with a private company like SoFi, Discover, if you consolidate with like a private bank, that will not qualify for those programs. So I just wanted to make that distinction because we get a lot of questions about people, because it's a hard decision to make. And so I will not make one decision one way or the other about whether or not someone should or shouldn't consolidate, but just making that note so people know.
Woo, appreciate you so much. Clearly you love your job. Listen, we always like to share with our audience how they can stay in contact with you. So Katherine Welbeck, not heavy on IG, but she is active on LinkedIn. I sent her an invite the other day and she accepted it, and I'm going to follow through on that. Of course, your Twitter account is there, and then the URL that I believe you shared in the other slide for the website as well. If you'd like to stay in touch with me, Kenneth L. Johnson, Instagram, LinkedIn is kind of the place where I reside, but you can meet me here in 2 weeks on the Digital Career Success Series, because we will be back. What's the date on that? Yes, April 27th with the cryptocurrency session. Man, we got Jamil Sheik and Derek Jones coming through. 2 TEDx Harlem speakers, by the way. Know both of these gentlemen. I'm excited to have them on. And for those of you that are interested in crypto, or if you have friends, colleagues, associates that may be interested, tell them to join us on the 27th. It'll be an interesting discussion with 2 leaders in the space. Listen, I'd like to end this by thanking Kat Welbeck. I swear to you, I love when I meet people that love what they do. And clearly, not only do you love it, but you're great at it. Thank you so very much on behalf of the National Urban League and Urban League Jobs Network team, Katherine.
Thank you so much, Ken. I'm so happy to be here. So thank you. And the National Urban League, I'm just so grateful for today and for everyone who joined. So thank you.
Amazing. On behalf of the National Urban League, Wanda Jackson, Dory Brown, wow, Kanjit, Adanya, Dave, the whole UL Jobs Network team. My name's Kenneth L. Johnson. I'd like to thank you, our DCSS audience, man. You guys came through big today. Great questions. Hope to see you next week for the cryptocurrency Digital Career Success Series. I'm sorry, 2 weeks from now. Take care, enjoy your day, and be safe, please. Thank you. Don't forget to download The State of Black America from the National Urban League. Ton of information on the NUL site, so check that out, please.